It's the modern version of the Roaring Twenties, maybe without the speakeasies. At least that's what the man they call Dr. Ed believes. Hi, I'm Dave Price. Dr. Ed is Ed Yardeni. He's the president of Yardeni Research, and he's a longtime economist, including for the Federal Reserve. Dr. Ed predicted a new Roaring Twenties for this decade. In our conversation this week, he will explain what he likes about the economy as we work our way through 2026. But he also wants to talk about something that he thinks too many of us are not discussing. And that's our aging population and how it can impact so much of our overall economic future. Let's begin with how Ed became Dr. Ed. Well, first of all, thanks for joining us. Secondly, tell us a little bit about your background. How'd you get to where you are?
Well, I studied at Cornell University back in the 70s. And at first, I started out as an engineer for a term, and I couldn't handle differential equations. So I quickly transferred to arts and science and majored in government and economics. And then from there, I went over to Yale, where I got a master's in international relations and then a PhD in economics. Then I moved to the Federal Reserve Bank of New York for a year. Got a call from a headhunter saying there was a opening to be an economist at EF Hutton, and I took that job. And from there on, I went to one job after another on Wall Street. I guess I'm unemployable. I couldn't keep a job for very long.
When EF Hutton talks, people listen. Wasn't
Yeah,
that their
yeah,
jingle?
yeah. And then in 2007, we went off on our own, and knock on wood, so far so good.
I'm always curious when people have international curiosity. Where does that start? So, like as a little kid, were you already fascinated by what was happening outside our border, or was that something that happened later
Well,
on?
I've always been fascinated by history. I like docudramas, documentaries that are historical nature, and I read a lot of history. There's a lot of history books behind me. It's you learn a lot about where we are today by kind of studying where we came from, and I've always been fascinated by that.
So, what similar? I don't know how you describe what period we are in right now. How would you describe it?
Well, I have described it back in 2020 when things looked pretty dismal. The pandemic started, and we had the lockdowns, and that was followed by some other grim developments. But in 2020, I said, this could turn out to be the roaring 2020s,
Hmm.
which seemed delusional at the time, but so far so good. Real GDP is at an all-time record high. The stock markets are record high. I mean, we got problems, but on the other hand, on average, America's doing awfully well.
Do you buy into that we have this bifurcated system that's kind of two economy system right now? Do you buy that?
The K economy, so-called. I mean, I don't really have a problem with the concept. I think it does kind of bifurcates into the haves and have-nots. But I think whenever I've looked at issues of income inequality, wealth inequality, relative prosperity, and all that, what I find is when I look at the studies of it, they almost never discuss the demography of aging. It turns out, obviously, that older people tend to be better off than younger people. It makes sense. They've worked longer, they've got more experience, they get paid more, and they also accumulate wealth along the way. And so I think a lot of the so-called K economy has to do with the fact that the baby boomers are working longer, living longer, have accumulated $80 trillion of net worth, and now they're retiring with that kind of money and spending it. And I think what I see from my personal experience and from my friends is a lot of us are trying to help our young adult children because we have to admit that there actually is an affordability problem. It's hard to afford a house. It's hard to afford paying for childcare, for after school activities. So a lot of us are helping the younger ones, and that's why I think on balance, the economy is continuing to grow and consumers continue to grow. If it was just going to be a handful of wealthy baby boomers keeping the economy going, that's kind of a stretch. So there clearly is more going on in our economy that can just be described as a K economy, suggesting there haves and have-nots and not recognizing the age issue.
So, how do you see what are the effects of this going to be where we're having the younger generation? I'm retired from this, but the younger generation having kids, not as many as the previous generation, and
Yeah,
probably not as much as the previous
yeah.
generation before that. What's the longer term impact of that?
Well, the longer term impact is that at least the economic consequences are if you've got a shortage of labor because of the demographic factor, and you want to maintain a decent standard of living, that can only be done with productivity. And that's part of the Roaring 2020s thesis is that I perceived even in 2020 that there would be a shortage of labor, and I didn't know about deportations and mass immigration than the restrictions on immigration. But I did know that demographically, the baby boomers are retiring and that there's going to be a slowdown in the growth of the labor force, and that companies would have really no choice but to scramble to augment the productivity of the workers they have. And we're definitely seeing that right now. We're seeing that companies are not laying off workers or not firing workers. They're holding on to them and they're giving them more tools to become more productive, and therefore they're also paying them more. On the other hand, we're not seeing the head count of consumers growing. And down the road, I guess the concern is that if we don't replace ourselves, which we're not, fertility rate in America is below 2, and the population starts to shrink, then all you have to do is look over at Japan today, and you get
Hmm.
an idea of where we could be tomorrow. Japan is a rapidly aging population, very geriatric, a lot of productivity there, but it's hard to keep an economy going if the growth rate of the labor force isn't keeping up to a certain extent with the standard of living that you'd like to have.
Yeah, and that's something I've been thinking about for a while because the you mentioned the fertility rate, that declining fertility rate. We were already dealing with that, but then to add this new component to it with these mass deportations and kind of shutting off the valve of anybody
Yeah.
else coming in, that's like a 1-2 wallop here.
Yeah,
So
what do we
unless
really,
we
yeah.
AI everything, how are we getting out of this?
Yeah, I mean, we seem to swing from one extreme to another, and we need to
Hmm.
be sort of in the middle on immigration. We need to
Is
have
that allowed?
yeah, I mean, I guess these days everything is politicized and everything is one
For sure.
extreme or the other, but we went from open border to closed border. And the reality is, history always shows that immigration is a very big positive for economic growth. But that's if it's maintained in a careful way, and you're not just letting anybody in. You're not letting criminals in. You're not letting people in that might turn out to be a drain on the welfare system. Immigrants historically have been very aspirational. They want to work hard. They want to achieve the same standard of living as most other people have in the country that they're coming to. So I think we really need to deal with this immigration issue in a way that benefits the United States, and that's by having a much more regulated immigration system. Because a lot of people want to come here. We certainly saw that when there really weren't any checks at the border, and there's a lot of really good people, smart people. You look at some of the biggest corporations in America, and they're headed by people who clearly came from overseas or the children of immigrants, and they've been very successful. They've been not only good to themselves, but good to the rest of us.
But because of how dysfunctional DC politics is, do you not see that adjustment happening? Like we need to suffer more before this happens, however long
Yeah.
these mass deportations and shut off last year. Do we have to
Yeah,
really start feeling it in different sectors before we sort of rise up and demand something?
well, there is a dysfunction in our political system. Everybody sees it, agrees with that. We all express the idea that we should all be getting along and compromising. We all know how to say it, but somehow or other, when it comes to the political people that wind up running the country, it doesn't work out that way. So, yeah, we the people have to insist that Washington gets things done in a way that's good for the country. Not the one extreme or the other extreme. Mass uncontrolled immigration is bad, and shutting off the border is bad. Um, Again, we want the economy to grow. We want people who'd like to have our standard of living come in. We also want them to accept our culture, to be part of it. The melting pot idea has always been part of that American dream idea that people can come here and aspire and work hard. But you can't have people coming here that want to just not participate in the culture and the history of our country. And so that leads to people taking the other extreme, which is to throw them all out willy-nilly. So I don't know. I don't have a solution for it. Perhaps, after trying both extremes, the country will settle down and come to realize that we need to do this in an orderly fashion.
I'm curious now that we've had months to watch the impact of this, what you've made of President Trump's tariff policy, and has anything that has transpired because of it, and I appreciate that it's not finished yet, but has anything surprised you with maybe the economic, the stock market, whatever reaction
Yeah.
you want to look at?
Well, I guess I have to say there's a lot of that I like about the administration's policies, but then there's some doozies like tariffs. I don't quite understand how that's supposed to make things better for anybody. It is bringing in revenues, that's for sure. But already the administration is talking about sending out $2,000 checks to people to give them the revenues instead of reducing the deficit. We should be working on reducing the deficit. And then it's not clear who pays tariffs. Clearly, American consumers pay some of it. So do American importers, American businesses that import, and so do foreigners. So the administration's view that foreigners pay it all is not accurate. The view that tariffs are not inflationary, it's not really quite accurate. It's true that tariffs haven't boosted inflation. It's kind of been stuck around 3%, but that's
Hmm.
exactly the point. It would have probably been down to 2% if it wasn't for the tariffs, and it probably is going there anyway. So I don't see any really shocking problems from all this. But look, the reality is the Republicans. I'm a conservative, and I like conservative policies, and I think the Republicans have had a shot here at imposing some conservative ideas, more free market, more deregulation. But there's a good chance they'll lose the midterm elections because the administration focused on tariffs instead of affordability, um, and wasn't really quite ready to deal with the issue. And now they're scrambling to deal with it. And it's not, ironically, they may actually have to reduce or eliminate some of their tariffs in order to get a quick fix on affordability, bring in more meat from Argentina, for example, to bring down food prices. So I'm not a big fan of tariffs. I'd rather have a relatively free trade. However, the reality is we live in a world where China has been cheating for a long time, has been abusing the free trade system, and so I can understand why the administration's frustration in that score and why they've been using tariffs. But maybe tariffs should have really just been focused on China and not on the rest of the world. But look, I'm not running policy making in Washington. It's not my job to offer policy prescriptions. I'm a investment strategist, and I try to say what are the implications of what Washington is doing and What are the implications? What geopolitical developments are happening? Um, so I don't think you and I are going to be able to fix any of our country's problems, even though we may have some good suggestions.
Are you of the mindset? I talked to a few folks earlier this week who believed that some of the impacts of tariffs we may not be feeling yet, in that some of the American companies have absorbed some of this. Either they were proactive and
Mhm.
upped their inventory before
Yeah.
the tariffs really kicked in, or maybe some of them were just frankly willing to absorb it for a while. But quarter one, quarter
Yeah.
two of 26, we may start seeing that more as consumers.
It's
Do you
it's
buy
po-
that?
it's possible. I won't say it's wrong. It's possible. The CPI, the Consumer Price Index, has three components, big components, and that is services, non-durables, which is food and energy, and a few others, and then of course it's got durable goods. And when you look at the three of them, what you clearly see is that durable goods inflation did pick up this year, and I think you can definitely attribute that to the tariffs. I'm thinking that this will be fairly transitory, and that we will see durable goods inflation moderate going into 2026. It looks as though China is eating some of the tariffs. We are seeing deflation over there in what's called their producer price index, and so they may be lowering their prices to kind of offset the impact of the tariffs. And it's a big world out there, and some Chinese production has moved over to Vietnam and to Mexico and places like that. So I think inflation's coming down from here. I don't expect to see it spike back up.
You have undoubtedly followed and talked to so many business leaders, corporate leaders throughout
Sure.
your career. And I'm curious what you make of Donald Trump's style. The one thing that strikes me is, here's a guy coming from the business world, right? He wasn't
Yeah,
really in politics before he
yeah,
jumps all the way to the top. But the kind of chaotic nature of the
yeah.
threats, then sometimes he backs off, sometimes he doesn't. What do you make about the whole style?
Well, it's unique. It's different. I don't think we've ever seen anything quite like it. A lot of it has to do with his background. He was a New York City developer, apartments, condos, commercial real estate. He owned some casinos, and
Mhm.
I'm not privy to exactly how business is done in New York City real estate, but I have to believe that when the developers get into a room with construction unions that they need, with politicians that they need, that there's a lot of shouting that goes on, there's a lot of threatening that goes on, a lot of bullying that goes on. And if you stand outside the door, all you hear is screaming. And then all of a sudden they come out and they're all like buddy buddies and
Shaking hands.
shaking hands, and we got deals, and it's a win-win situation. And that's kind of the way you have to look at the president's style. It's very New York.
Do you see us? Can we stay above? Can we avoid falling into recession? On the
Mhm.
agricultural side, there are many who believe we've already hit it, but at least in
Mhm.
parts of it, do you think we can stay above?
Well, I've been the optimist on the economy since the beginning of the decade. Again, calling it the roaring
Yeah.
2020s. Back in 2020, it looked delusional since things looked pretty depressing. But the economy is, think of all the shocks that the economy has weathered. We had the pandemic, and right away we had 2-month lockdown that caused a 2-month recession. Then we had the social distancing requirement in services. And from there, we had supply chain disruptions leading to a surge in inflation, leading the Fed to raise interest rates from 0 to 5.5% on the so-called federal funds rate. And then we have had tariffs this year. Now we're kind of wondering whether the funky developments in the labor market, the low pace of employment growth is something that'll finally take this economy down. And yet, despite all that, the economy is, other than that 2-month artificial recession, has been growing. The last recession we had was 2008, 2009.
Mhm.
So the economy's resilience has really been quite extraordinary. So I got that right, and I'm going to stick with it, partly because it's worked, and the economy is, due some respect. It's kind of been like the Rodney Dangerfield of, of economic thinking. It's just hasn't got much respect, but it should get more respect now.
Got a lot of armchair quarterbacks watching the Fed. We saw in December the Fed took another
Yeah.
little small step down. Is that the proper course? You have the
Mhm.
president, the real estate, the former real estate guy. Obviously, he wants it to really
Wants to,
fall down quickly. But
yeah.
is this measured approach kind of the right blend?
Well, before I go there, let me just finish off on the previous question about agriculture feeling like it's in a recession.
Hmm.
And the reality is we've had rolling recessions, right? I mean, we've had housing's been in a recession, office buildings, agriculture in some areas has been in a recession, and yet the overall economy has done quite well. So it's conceivable that we can have area pockets of weakness and yet overall strength in the economy. Now that kind of gets to the question you just asked about the Fed. That's a very sensitive issue for me. I get emotional about it when you talk about the Fed because for the past few years, in writing, I've said that I'd be more than happy to do what the Fed does for half the price, and just with my staff and do it from home. I don't think it's that hard, and I don't think you need to spend that much money to do it. But they didn't take my offer. And then last year I said that they shouldn't ease, and they ignored me completely. And not that I'm on the radar screen, but they went ahead and eased by 100 basis points. They
Hmm.
lowered the Fed funds rate by 100 basis points. And I warned that the bond market, I coined the phrase bond vigilantes back in 1983. You might have heard that phrase of late. But I warned the bond vigilantes might not be happy. The bond vigilantes have the idea is that if the fiscal and monetary authorities in the U.S. or in other countries don't maintain law and order in the capital markets and the economy, keep inflation down, and so on, that the bond vigilantes will step in and they'll push bond yields up to demonstrate the fact that they are not happy. And so last year, bond yields went up 100 basis points. Mortgage rates went up 100 basis points. So the Fed really eased? And the answer here is not really. I mean,
Hmm.
they were kind of offset by the bond vigilantes. Here again, it's not, I would not have lowered rates by 75 basis points, but they went ahead and did it anyways. Look, I mean, there is a concern about the labor market. I'm not convinced that lowering interest rates can really help the labor market very much because on the supply side, part of the problem is deportations and freezing of the border. So the labor force hasn't been growing very quickly. The other part is artificial intelligence
Hmm.
probably is creating a problem, especially for kids coming out of school with degrees that don't really give them skills that they need right now. And so it's going to take a few years for everybody to sort out the skills mismatch. But for now, it's a problem. But I don't see how lowering interest rates resolves that. So why am I against lowering interest rates? Well, because I think, yeah, the Fed has lowered short-term rates, but long-term rates, which means mortgage rates, and the affordability issue in the housing market, it really hasn't been eased by the Fed easing. And I'm also concerned about financial instability. I've been rooting for a bull market, but I don't want a melt down situation. So that's where my head's been at.
Are we too short-sighted when we watch the Fed? And by that I mean, now we'll hear the politicians wrongly say that we had record inflation during the last administration. And for those of us who remember
Yeah.
years far enough back, we know that's not true. But are we too short-sighted in that in the pandemic when we crashed down to essentially nothing, we're forgetting where we were historically beforehand?
Well, I think, this kind of gets to, if I may jump, it gets right to the affordability question. And the the response to the affordability question for a while was, well, wait a second. The rate of inflation's come down from like 9% a couple of years ago to 3%. So why is anybody complaining
Hmm.
about affordability? Well, they're not really complaining about affordability. They're complaining about the price level. We all, you walk into a restaurant and you order a steak, and we all remember it was about half the price just 5 years ago.
Hmm.
And we can see we all remember what prices used to be. And again, economists kind of taking their data will say, well, wait a second, real wages, inflation adjusted wages are actually up from where they were five years ago. Wages have increased faster than prices. The problem is the wage number they're taking is called average hourly earnings. Average is the key there. There are a lot of people that are below average that haven't kept up with those prices, and they are suffering a reduction in their standard of living, and they're letting us know it, and rightly so. So it's I think there is a price level issue here. I don't think that the administration is going to be able to bring prices down across the board. Might they bring meat prices down because they import more from overseas? Absolutely. Um, but the tariffs on steel, on aluminum, on copper, that's not going to bring down the price of cars. And to the extent that the price of new cars is extremely high,
Hmm.
people then go buy used cars, and then those prices go up. So yeah, there. And then of course, I mean, insurance premiums are just crazy. I mean, I got
Hmm.
5 kids, and the two youngest ones are in their 20s, and their insurance is $4,000 per kid in New York, anyways. And coming out of college, there's no way that these kids are making enough to afford, a standard of living that's average. And so again, from my personal experience, I'm helping them out with the insurance, and I think a lot of parents who can afford to do that, but there is an affordability issue for sure.
I am really thinking a lot about what you said earlier in this conversation, and now you just brought it up again about those who can helping their adult children, frankly.
Yeah,
And this might be sort of a depressing way to ask a question here, but it makes me wonder because of the affordability that we're having, and I'm thinking a lot of like my oldest is 15, so he's got
yeah,
a few years to go before high school and college, and the good Lord willing, he'll be in the major leagues for a while pitching, but we'll see how that turns out. But regardless, whenever he really gets out there on his own, it does make me wonder a lot about those in their 20s, and are we
yeah.
going to go through a period where those of us who can, as maybe older adults, is it going to be almost not required, but helpful of us if we're kind of reaching out to some of the younger ones, whether we're allowing them to live in the basement or,
Hmm.
one of these, whatever the heck you call those things, they used to call them mother-in-law units, that you
Yeah.
build in your house or put in your backyard or whatever for those of us with a yard. But like, is that too ridiculous a premise here? Like, are we going to have to go through sort of an adjustment to let the housing stock kind
Yeah.
of build back up and chill and prices come down?
Yeah, well, I don't know how to tell you this, but the scenario you just laid out is kind of here and now. I mean, there's data showing that 30% of young adults in their 20s are living at home, and so that's already happening. There's a lot
Hmm.
of multi-generational housing going on. Yeah, I think a big issue with regards to affordability is definitely housing. We definitely have a housing problem, not enough housing. Home prices are way too high, and a lot of that has to do with not in my backyard. People don't want to have affordable housing in their neighborhoods,
Hmm.
and there's regulatory issues, environmental issues. We really have to do a better job of building more homes that are affordable for our kids, just to get them out of the house.
Exactly. So as you look at 2026, what piques your curiosity? What are you going to be watching?
Well, a lot of moving parts going into 2026. We're probably going to start out the year with the Supreme Court possibly ruling against the tariffs. And then we'll see the administration things is ready for that, and we'll probably try to scramble to glue tariffs together with some other authority, which could also be challenged in court, I suppose. But because of the affordability crisis, which really, the socialist, the mayor of New York, Mamdani, is really the one who made a national issue
Hmm.
of it. It's amazing how one word can just kind of catch on, and all of a sudden the president's running around the country trying to explain that his policies are going to create more affordability. He can't go around saying it's a hoax because it's not a hoax.
He ran on it.
He ran on it, and then he kind of got sidetracked with tariffs instead of really focusing on making America more competitive. Make America more competitive, and inflation will stay down, and maybe some prices will come down. But it's been a mistake, I think, from the point of political mistake, not to focus on what was the key issue going into the midterm elections, and that's something that we'll see how that plays out. Hopefully, the administration will be able to scramble together something which does lead to an improving financial situation for most people. I'm a little concerned that the administration is now talking about sending $2,000 checks to a lot of Americans. I think whatever revenues they manage to collect from tariffs should be used to reduce the deficit. That's kind of a key issue, and that in turn might bring down mortgage rates, which might in turn make housing more affordable for a lot of younger people. So I'm looking at those kind of issues. Uh, Washington matters, but at the same time, I've learned over the years that it's amazing how well our country does and our stock market does, despite
Despite.
Washington. I mean, there's a few hundred million of us working stiffs that go to work, and we try to do the best we can for ourselves, our families, our communities, our country. And we do that factoring in that Washington can be a real pain. And yet we deal with it. We succeed despite that. Uh, but next year, I think, you raised an issue of whether there might be some renewed increase in inflation. That would be certainly troublesome. I'm not expecting that, but it's something I'm looking out for. The situation in the stock market, I'm looking to see. A lot of people have been asking whether we're in an AI bubble.
Hmm.
The idea being that it's going to burst, and if it bursts, it'll take the economy down. Kind of a repeat of what we had in 1999 and 2000. And I think instead of asking the question, I have the answer to whether AI bubble has burst, and that is it's deflating. It's not bursting. It's losing some air, and I think we could take some air out of the AI enthusiasm in the stock market without taking the economy down. So I think that's actually a healthy development. I would not want to see stock market just go into a melt up frenzy
Sure.
going into the new year. That would not be a healthy situation.
You keep making me think of things. I'm going to try to throw in two things before we come to a close because of what you
Sure.
talked about. The one thing with President Trump that I've wondered about, clearly he has his own style, right? If you want to be kind, you call it boastful. But
Yeah.
I do wonder, while he was right to tap into the anger people felt about higher prices of the Biden administration that then transitioned to Biden's running mate, then taking over as the nominee, had he perhaps not told people from day one, this will happen from day one, and he's selling people on the thought that literally the day he becomes president, your life's going to get better and cheaper, right? But
Yeah.
clearly that was not possible. And we can go through, and I'm sure he'll point out eggs are cheaper or whatever. Well, it's a little
Yeah.
more
Yeah.
It's a little more complicated than that. But I do wonder if people would have given him more the benefit of the doubt. Obviously, tariffs are a huge wild card, and that's either going to work or not work. But I do wonder if people would have stuck with him a little bit more on this had he not promised them the moon and then failed to
Yeah.
deliver on day one.
Yeah, well, look, yeah, you're getting a little more political than I usually get.
Yeah, sorry.
And again, it has to do with my job. My job is to be an investment strategist and to recommend whether you should or should not be in the market.
Hmm.
And I've seen people bail out of the market just because of their political views.
Sure.
And we had a great bull market under Democrats and Republicans. And again, I kind of my mantra is, look how well we've done despite Washington. So I try not to get too emotionally wrapped up in
Sure.
Washington and not give them, too much weight in my thinking and kind of focus more on the entrepreneurial spirit that's still very much alive and well. But you asked the question, so I'll answer it, and that is, I think that always with the benefit of hindsight, I think benefit of hindsight, time flies. It's amazing how quickly you go from electing a new president to suddenly worrying about the
The
midterms
midterms.
for both parties. And I think a lot of time and effort was expanded in with tariffs, and a lot of promises were made that, as you said, are not realistic. And just claiming that things have happened just because egg prices are down, it's just not going to play with people. And I think it was definitely a mistake to characterize the affordability issue as a hoax, because a lot of people are in fact being very much affected by it. So maybe promising less and delivering more is sometimes a better strategy than getting people's expectations up. And there's a lot of young people that are probably voted for the Republicans during the last elections that are going to turn and vote for Democrats, not because they love socialism or they love the Democrats versus Republicans. It's just like, hey, if this circus doesn't work for us, let's try another one.
Do you see? I'd like to wrap up with this because you mentioned the $2,000 potential payments here. I'm curious, what about from the market side? Does the market want us? I'm not saying this is going to happen because it seems like regardless of who we put in power, they don't seem to focus on the debt. For those of us who look at $37 trillion and think that's a big deal,
You're wrong. You're wrong. You're wrong. You're off by a trillion. It's already
Oh
38
yeah,
trillion.
sorry, you're right. You're right about my goodness. Yes, yeah, you're right. Thank you for that. I wish you were wrong, but you're not.
Yeah.
Does the market want us to be more fiscally disciplined and responsible? Because there is that one
Yeah.
side, and I don't want to get too political, but they've decided they're going to try to lower the cost of government, right? They're getting rid of employees, downsizing here, downsizing there, whatever. Will the market go with us on this, and do they want to see us kind of run this more fiscally responsibly?
Well, the market is really, I am an economist, but I'm also a strategist.
Hmm.
I find strategy to be easier because you only have to get two variables right to get the stock market right. Because, the stock market is the price of the stock market. And then it's equal to PE times Z, which is the earnings times the valuation of those earnings. So it's really easy to forecast them. Getting them right is the tough part. But where I'm getting at is the market cares about earnings and it cares about where earnings are going. And so policy making obviously affects the perceptions of what the earnings outlook is. And so the market, again, is really not very political at all. It doesn't go up or down just because it's a Democrat or Republican in place. And the market has the same attitude as I think I have, which is one way or the other, the economy continues to move forward with occasional recessions and occasional bear markets. So I can't tell you that the stock market is rooting for the deficit to go away, because we can make the deficit go away just by raising taxes a lot and reducing outlays a lot. And the market probably wouldn't be very happy with that, because that could be like stepping on the brakes, slamming on the brakes. And the market just hates recessions. That's really it. So as long as, and it doesn't like inflation to the extent that forces us, the Federal Reserve, to cause a recession. So that's really the way to think about it. And so I can't say that the market is rooting for the policies of one party or the other. They just want the economy to continue to grow, figuring as long as it grows, we'll get around Washington, we'll deal with Washington, but we're going to go about our business, and we're going to figure out how to get more revenues and get more profits out of that.
Indeed. Dr. Ed, really appreciate you, and thank you for allowing me to sort of weigh into more political stuff than you normally want to delve into, but I appreciate your perspective about all this.
Yeah, well, anybody who's got any complaints, just put it in the comments. To Dave. I had nothing to do with it.
Exactly. Completely my fault. Thank you much. Really appreciate your time.
Thank you.
You can learn more about Dr. Ed's modern day version of the Roaring Twenties. You can find that in our profile piece about him. It's in the weekly American Farmland Owner newsletter, the place where landowners get their news with profiles, the latest trends, challenges, and research that impacts America's farmland. Check it out now at AmericanFarmlandOwner.com. Thanks for joining us here on the podcast, the first one of 2026. And thanks for caring about the future of our farmland.